Good afternoon, everybody, and welcome to the show. This is Taking Stock with your host, Graham Neary. This is our very first episode, so I hope you'll forgive any teething problems that we may have, but I'm sure we'll figure them out very quickly. This is going to be a roundup of news in the UK stock market. I've got a fairly action-packed show for you today. I've got, maybe about a dozen shares we might be able to look at, covering a wide range of sectors. And I'm going to share my screen in order to do that. So this is the Vox Markets app and website. Whether you're watching this live or on the replay, please do leave a comment. I'm able to see the comments live and I'll be able to respond to you and maybe take reader or viewer requests as well and have a bit of back and forth. Okay, so let's get started with Gaming Realms. So Gaming Realms, the shares are down a little bit today, but I thought it was worth having a look at the results here. So we have annual results out today, and pretty good results they were too. We've got revenue up 26%. We've got adjusted EBITDA up 29%, and a profit before tax for the year of £5 million. So this company makes the Slingo game format. So it's a gambling sort of format, Slingo, and it's used by a wide variety of websites and other gaming companies. So it's a well-known game. Never played it myself. It's a mix of bingo and slots. And Matthew is in the comments with our very first live chat. So thank you very much for the first live chat from Matthew Roberts, who wishes me good luck. And thank you very much. Okay, so yeah, this Gaming Realms company, it's really a bet on the Slingo game. If you like Slingo, never played it myself. Seems like fun, probably worth a shot. So the Q1 highlights here, we've got revenue in line with expectations, 14 new operators, 3 new Slingo games, and a distribution agreement with Playtech. So plenty going on here. In terms of the outlook, they are well placed, they say, to deliver further growth in new and existing markets, and international growth there as well, including Portugal, in the United States, and in Greece. So lots of interesting news there from Gaming Realms. I must admit it was an impressive announcement. Market cap there is just over £100 million. Now, I'm sure you all saw the disclaimer at the start of the video. There's no advice being given here, so always do your own research. I do not pretend to have all the answers. So always do your own research or seek advice before making any decisions. Matthew says, Rank, thoughts on this as a gambling play with the new regulation changes? Well, I've been a long-term fan of Rank. Rank has the ticker RNK. I'm a big fan of this company. It doesn't have news today, but they've got the Grosvenor Casino brand, which I think is top-notch. I have been in a Grosvenor Casino in my life once or twice, and had a good time. And I think they're brilliant casinos. And that's not all they do. They've also got the Mecca bingo halls, which caters to a different type of audience, you could say. But Rank Group, I'm a big fan of Rank. A bit more, it's physical, it's real life gambling, so there's a lot more costs there. There's real life people, getting paid wages, in physical casinos. So it's a different type of thing than an online gaming company. There's a lot of energy costs with physical casinos. So it's a different type of investment, but I am a fan of Rank as far as that goes. Thank you very much for the suggestion, Matthew. Okay, so we've had a quick look at gaming realms, which I think is interesting. Superdry, I believe, is worth a mention. Superdry share price is down by 51% today. So the market cap there is a very sad 14 million pounds there, according to the Vox Markets website. And I think that's a live market cap, or as good as live. So Superdry has been a troubled brand and a troubled company. I do have experience investing in this one, but I haven't owned it or invested in it for a very long time. Unfortunately, it seems to be going the way of so many retail companies, fashion retailers, where the stores get a little bit quiet. The overhead costs are way too high. You've got leases, and it all just gets a bit too much. And the news here, as you may recall, if you've been following this story, Julian Dunkerton founded Superdry, I suppose many years ago. He left the company and then he came back, and he is sort of come back on his white horse to save the company. And so we've got news here that essentially he's not going to be buying the existing shares. So here's the news relating to Superdry. Julian Dunkerton, and I must say the wording of this announcement was very, very well done. See what you think yourself. Essentially, Julian Dunkerton and the transaction committee have concluded a takeover offer from Julian Dunkerton for the company is unlikely to deliver an outcome ... that can be executed in the context of the company's ongoing work on its turnaround plan. A very, very diplomatic way of saying that he's not going to buy the company. So now, where do we go from here for Superdry? Dunkerton remains fully committed, and he's in discussions with the company in respect of alternative structures, including a possible equity raise, which would provide additional liquidity. And it is expected, however, that any equity raise would be at a very material discount to the current share price, and it would be conditional on a delisting of the company. So that is terrible news, I'm afraid. Commiserations to anybody holding this one. But I'm sure anybody holding this one will have been prepared that that bad news was possible. Clearly a distressed story. And when you get the news that the company may be delisting and the placing or the fundraise would be at a substantial discount to the current share price, you really have to assume the worst for equity shareholders, I'm afraid. So I am sorry for anybody still holding this one, but the writing has been on the wall for a while. I would presume the shares are worth very close to zero, and probably closer to zero than the current market cap. Thank you very much to El Saint in the live chat, who asks, any chance you could explain the difference between a placing and a subscription? Well, I mean, I think in many contexts they can mean the same thing. So I'd have to specifically look at that announcement. But I think in many circumstances, a placing and are similar, if not the same thing. Okay, so let's move on to Intercede Group. So this has the ticker IGP. And the news here is actually, I believe, about a placing. So, or excuse me, that will be the subsequent company that we look at. But yeah, we've got news here from Intercede. Intercede, the leading cybersecurity software company, announces further contract and subscription renewals in excess of $4 million in value. That seems like pretty small beans, but for a company with a market cap of £67 million, so I'm not sure if that is really very significant news for them, but it seems as if people are taking an interest in the story. Maybe somebody can let me know the significance there. Moving on to Revolution Bars. I'm afraid this one is bad news. We've got a suspension, and it's a suspension for a fairly disappointing reason, pending publication of the company's interim results. So here's Revolution Bars with their explanation for the suspension. They were supposed to publish their interims by the 30th of March. They've been unable to do so, and hence trading has been suspended. So that will be a disappointment for shareholders. It's always, I think, quite embarrassing when companies fail to get their results out on time. Especially if there isn't some very good reason for it. And then the company also says that they continue to evaluate all the options available, including engaging with key stakeholders and potential investors with respect to a fundraising. So another story there that seems very distressed. Market cap here is only £3 million. So it looks as if Revolution Bars is possibly heading for something close, even closer to zero. But again, if anybody was still holding Revolution Bars this morning, I'm sure they were already braced for the bad news. And it goes with the territory. I think when you're investing in bars and pubs, especially ones that aren't freehold, that don't own their properties, you've got to expect that sometimes they're gonna fail, and that's the story here. Okay, let's move on to Renew Holdings. So Renew Holdings has had news here with a H1 update. So let's have a quick look at this one. So the leading engineering services group supporting the maintenance and renewal of critical UK infrastructure. So this is an inline update. Markets, order book remains underpinned by long-term framework positions, and so on. And net cash is in line with expectations. So that's all very reassuring there on that front. I've got to admit, Renew Holdings is not a company I've studied much in the past, but it's got a market cap of over £700 million, slightly too big, for a small cap analyst. But let's take a quick look at its financials on the website here. As you can see, the share price has been pretty strong, and in terms of the financials, we've got pretty decent profit performance here in recent years. So and very nice rising revenues as well. So Renew Holdings could be worth a look. Not one I've studied in much detail, I have to be honest, but just thought I would throw it into the mix. Okay, now here's the one where there has been a secondary placing. So for El Saint, who was asking about what the definition of a placing and a subscription. So on March 27th, so I'm just going back to last week's news because I just thought this was an interesting story. TI Fluid Systems is a big company, market cap £760 million. And last week, they announced that it was this company, BC Omega, which is basically Bain Capital. So if you know Bain Capital, we're talking about a large private equity company, and they have sold 50 million shares of TI Fluid Systems. So the big worry here for TI Fluids Systems shareholders is that the private equity guys and girls have decided to sort of cash in here. And if if you're familiar with how the market works, private equity tend to be very good timers. They tend to sell out at very nice prices, and they tend to buy at very good prices because I suppose their time frame and their knowledge of the companies is so rich that they just understand when to get in and when to get out, and they'll be patient. I mean, I'm speaking very generally here, but I think it's a fair point that compared to, say, mutual fund managers, private equity investors, private equity funds tend to time things much better. So anyway, this Bain private equity fund, still owns 141 million shares of TEI Fluid Systems after this placing. So they still own 27.5% of the company. So that could be a potential source of concern. So in terms of how this works, this is a secondary placing, so it's not a transaction with TI Fluid Systems. It's a transaction between shareholders. So there's one shareholder selling, and there's other shareholders buying. Okay, so that's TI Fluid Systems. Let's move along to another one. Let's take a look at Belluscura. Apologies if I pronounced this one incorrectly. So market cap here is £16 million, and unfortunately the share price is down by 46% today. So that's going to be in the top fallers of today. And let's just take a quick look at this trading update and see if we can figure it out. So this is a leading medical device developer focused on lightweight and portable oxygen enrichment technology. All right, and unfortunately, there has been an untimely delay in completing the acquisition and closing of another company, TMT. There's sales and manufacturing process on other products have therefore been pushed back by at least 4 months. And it is, so unfortunately, the cash balance here is $3 million, which hopefully provides them some headroom, but they're going to they've revised their expectations lower. They're now expecting revenue will be lower than market expectations at $16 to $19 million, and adjusted EBITDA will be between a loss of 0.75 and a loss of 1.5 million. So yeah, I mean, when I see a company with negative adjusted EBITDA, it's obviously a concern, but clearly this is an ambitious company, and hopefully they can get through this. But certainly tough news for shareholders today. Let's just take a quick look at the historic financials here. So yeah, so I mean, it's clearly an early stage company. Hopefully they can turn it around, but tough news there for shareholders. Let's move on to let's do 88 Energy, because that is a good news story, and I'd like to cover a good news story here. So 88 Energy is up 51%. Thank you for the comment, Trey Selector. If you could expand on that, I'd appreciate it. So 88 Energy is up 51%. As you know, I'm not an oil analyst by any means, but I thought it would be fun to cover a top riser for today, because I've covered a few companies that are, that have fallen very, very, very badly today. So I thought I'd cover something that's gone up. So 88 Energy, market cap 99 million pounds, and we've got it's basically Struck Oil, light oil discovery at a site. And look, I can't pretend to understand the terminology here, but it certainly sounds pretty decent news. They are now going to seek an independent contingent resource declaration for these reservoirs based on the flow of hydrocarbons to surface. Okay, so and that is in Alaska. Okay, and we've got a CEO comment who says that it is a significant milestone for the company and its shareholders, with the first successful flow of oil to surface achieved at the company's Alaska projects. So pretty exciting stuff. And yeah, we've got a good news story. So not everybody has woken up this morning to bad news, at least. Now, I was going to mention Redx Pharma. Unfortunately, this one we've gone back into the red here, and unfortunately, this is down 65%. Not such a tiny company. Your market cap is still 25 million pounds, even after today's 65% fall. And yeah, I was looking at the financials here. The financials here suggest that this company, again, I use the phrase early stage when I see that it's been loss making consistently. Consistently loss making company, but again, you hope that these companies will turn it around. There's many cases of successful companies which took years to develop into success. So that's what you'd hope for. But unfortunately, this company, Redx Pharma, has decided to take its ball and go home. It's looking to cancel its admission to trading. So I always think it's fascinating when you see companies fall by such an extraordinary percentage amount when they announce a delisting, because in theory the listing shouldn't provide that much value to an investment. It should be the same company after all, whether it's listed or not listed. But clearly a lot of private investors and other fund managers as well value the listing very much, and therefore when they learn that a listing is going to be cancelled, they no longer want to hold the shares. So that's what's happened here. Redx, so they're calling themselves a clinical stage biotech company, and unfortunately they've decided that it's no longer in the best interests of the company to have a listing, and they're going to re-register as a private company. So what did they say? They said, our current market valuation is not reflective of our track record or future potential, and is not conducive to raising the level of capital required for our growing clinical portfolio. And as a private community, we can access a broader universe of specialty investors. And I'm sure, this sort of announcement will get people soul searching about the AIM, the alternative investment market. Does it still work? Does it still serve a purpose? Clearly, it's been a really, really tough few years on AIM. And when you see a company saying that we'll actually be able to raise more money if we're not on AIM, that does seem like a pretty damning conclusion to draw. But it may just be the case that the people that they need to raise money from are not the type of people who are AIM investors. So maybe there's just some kind of a mismatch there, or maybe they're just struggling to raise money, and and they don't want to have to do it, as a publicly listed company anymore. But look, good luck to them. It is tough for shareholders, and it's another reminder that when we get involved in small companies, we need to be very, very conscious of the risk of a delisting. I said recently that until a company gets a market cap of, personally, I would say £50 million or more. Until a company gets to that sort of scale, I think it really needs to be using its listing to grow, because ultimately, if you've got a company with a market cap of 10 or 20 million pounds, I don't know if a listing makes sense long term. I think they should be trying to raise money and grow if they're still at that small level. Okay, so Trade Selector has come back with an explanation of his comments on, or his or her comments on Belluscura. He says TMT was a cash shell, and Belluscura was trying to get that cash out of the cash shell, and that's why it's not. That's the disappointment, basically, that they were trying to raise cash by making that acquisition. So thank you for the explanation, and appreciate that. Okay, where will we go next? Let's have a quick look at a company with a very funny name. All right, so we're getting into the funny ones here now. We've got Sizzle. All right, Sizzle Biotech. But I thought there was a news story here. Okay, so so I just thought I'd look at this because it was on the most read RNS list, and so I just thought I'd take a look at something. Clearly people are interested in this if it's on the most read RNS list. So there must be a reason. So Sizzle Biotech. Let's just remind ourselves. Okay, tiny company, market cap 7 million, but again, people are clearly interested in this one. Strategic licensing and partnership MOU for North America. So a non-binding memorandum of understanding for a strategic and exclusive licensing agreement to develop and offer its proprietary test for a biomarker, which is highly associated with early stage lung cancer throughout the USA and Canada. Okay, so look, biotech again. Biotech is very, very exciting little sector to get involved in, and I can see why this is on the most read RNS list, because clearly it's exciting, but it's a non-binding memorandum of understanding, so clearly there's quite a lot of work that will need to be done from here in order to turn this into a successful long-term business venture. So but best of luck to them. It does say that they get an upfront payment of $100,000 as a non-refundable fee, and it envisages Sizzle providing an exclusive license to a US-based company, which is their recently incorporated US-based company, to develop and market clinical diagnostic assays based on this biomarker to facilitate the early detection of lung cancer in North America. So yeah, hopefully that works out, and I can totally understand why it's on the most read RNS list for today. Lemon Physical in the comments, thank you very much for the comment. I appreciate that. Will this be hosted daily, Graham? Will you have any co-hosts? Yeah, well, look, we're going to give it a try, and I do intend to be here tomorrow afternoon. If somebody wants to be a co-host, I'm sure we can arrange to have a co-host, but it's just me for the moment, and I will be here tomorrow, and I will hopefully be here the day after that. So yeah, hopefully this will be you'll be able to hang out with me, from now on in the afternoons. But let's see how it goes. Okay, so where will we go next? We've already covered, quite a lot of different stories here. Let's try this one. Horizonte Minerals. Okay, so we're just looking at a company that's up 38%. Another tiddler. I'm sorry, it's another tiddler, but I thought for today I would do top risers and top fallers and see what falls out. So yeah, teeny tiny company, £6 million market cap, but it's up 39%. So I'm sure somebody's feeling pretty good about that. And let's get a look at their corporate update. As part of the interim funding package, okay, so we've got existing lenders agreed to waivers, including the deferral of interest. Such senior lenders have now agreed to further extend the waivers until 30th of April 2024. Going forwards, and as announced previously, there can be no guarantee that senior lenders will consent to further extend the current waivers. So Trey Selector in the comments says that this one is bust. Even the senior debt holders will make no return. Well, yeah, I would. I'm not going to argue with you, Mr. Trey Selector, because we've got senior lenders extending waivers for a few months. So clearly, that's not a strong position for the equity to be in. To make an understatement. So this is what you get when you look at the top risers and the top fallers. You get some interesting little news stories from little companies like this, but probably not something that anybody would consider to be investment grade. Okay, so I think I've pretty much covered the sort of the daily news that I was going to look at. I might just scroll back to, if you'll indulge me, I might just go back and look at this one for a moment. So this is Northamber, and the share price fell. Now I think this was last week. Let's just get a 2-week chart. So yeah, up until last week, the share price was about 46p, and it's fallen unfortunately to 35p. And this is just a company that I've been following it for so many years. I just can't help myself from taking a look at it sometimes, because I used to own shares in it, and they put out a half-year report. So this company is a distributor of IT equipment, and it's made a loss every year for some very, very, very long time, and it's just remarkable that that it just continues to do this sort of indefinitely, when it could just cash in. It could just sell its assets and maybe invest in the S&P, or hell, even the FTSE. Invest in a FTSE index fund, and everybody would do pretty well. Maybe even give the money back to shareholders. But you can see here net assets at 89p, and that's fully tangible. That is, I think it's pretty liquid as well. A lot of working capital, and they've had that. There's been this incredible discount between the share price and the net asset value for years, and they could just cash in at any point. But they struggle on, and there is a shareholder here with I think it's something like 60% of the company, and it's just going to carry on indefinitely, I'm afraid. It's just remarkable to me that some people think that the economy or that financial markets are efficient, but when you look at stuff like this, you have to say, no way. Um, this is not. There's no efficiency happening here. This is just going to make a loss forever. uh, I mean, they sort of get around break even sometimes, but they do not earn a decent return on capital employed, and they're not going to, because there's no need for these distributors anymore. Um, okay, so that is Northamber. It's a failed value investment. It's a value trap, in my opinion, and it's just going to stay that way, I think, forever, because management like running a company. Okay, now Lemon Physical back in the comments. Uh, Moving away from some of these pump and dump hype jobs. Okay, bit harsh there, but what are your thoughts on PayPoint, and what is the market missing? All right, so PayPoint, I'm a long-term fan of PayPoint. I think it's a terrific collection of businesses. Um, I suppose the main thing, the main point I would say about PayPoint is that it is monopolistic when it comes to cash points and cash terminals. You go into a newsagent and you're probably, corner shop or whatever, you're probably going to be greeted by a PayPoint terminal. So convenience stores feel like they have to use it, and the group, the PayPoint group, have assembled a whole bunch of services around this product, which seem to have good synergies. So you can pay bills using PayPoint. You can collect your deliveries, at PayPoint stores, or at stores which have PayPoint, which use PayPoint. Um, they bought Appreciate, which I used to be a shareholder of. So they got a really, really sort of formidable gift voucher business. And from memory, I think they got it at a pretty attractive valuation. And that gift voucher business, at first, I wasn't sure, but they seem to be reinvigorating it. And not only are they reinvigorating the gift voucher business, but they're also breathing life into the Christmas savings product at Appreciate, which was previously known as Parks, Parks Christmas hampers. So I think they have a really good understanding of these sort of local communities where there's a demand for uh, these types of services, paying bills in person, for example, saving for Christmas, maybe collecting a delivery, topping up certain accounts, whatever. It's I think they've got a very strong understanding of these local communities. They're really drilled into the convenience stores. Convenience stores feel like they have to use them, and yeah, I'm a fan. They've generated a really strong return on capital historically, really strong cash flow, and they've returned a lot of money to shareholders. So I have nothing bad to say about PayPoint. Um, I even go so far as to call it a fintech stock, because I think a cashier or a cash terminal is a financial technology. Um, so yeah, I mean, let's take a quick look at some of the latest news here. March 20th, we've got PayPoint and Lloyds Bank announced major strategic partnership expansion. So Lloyds Bank CardNet will become the main card acquiring partner across the PayPoint Group's extensive network of over 60,000 SME and retailer partners. So what will it do? This will offer merchants a market-leading banking and card services proposition, combining card payments, a 12-month fee-free Lloyds Bank business account, and a connected competitive commercial card offering. And this strengthens the PayPoint's market position, accelerates growth across our merchant estates, and delivers better tools, support, and experience for its MSE and retailer partners. So, I mean, what do we take from this? Well, I think it just goes back to what I said, that PayPoint really understand convenience stores. They understand what the retailers want and need, and they do offer a financial type of service, or for a financial technology type of service, and maybe this all makes sense that they would be partnering up with a bank to offer merchants more financial services. Let's see, anything else of interest here. The PayPoint customer base, so that's convenience stores, I would say, is a shorthand. Will enjoy earlier in the day settlement, a faster onboarding experience, a new merchant app, additional customer data and insights, and wider access to Lloyd's leading range of business banking and lending products. And it goes to Northern Ireland as well. So yeah, they love to shop is mentioned here as well. So this goes back to the Appreciate takeover. So PayPoint got the Love to Shop gift voucher brand, and so this agreement will provide additional revenue streams, as well as creating further growth opportunities for PayPoint's enhanced range of capabilities, including a merchant reward scheme leveraging the Love to Shop rewards and engagement platform. So, I thought it was quite mysterious, trying to figure out what the synergies with Appreciate might be, but there we have it. There's an example. It'll be interesting to see how it works in the real world. The CEO of PayPoint says, good execution of this partnership extension is another key element to the delivery of our overall business ambitions and our immediate target of delivering £100 million EBITDA by the end of FY26. Even though they've mentioned EBITDA there, I would not hold it against them. They've generated real profits. Let's take a quick look at the financials here. Pre-tax profit of £42.5 million in 2023. So this company, in my opinion, generates very good real profits, generates cash, and pays out a pretty decent dividend stream. 37p paid out for 2023 against a share price of 486p. So obviously do your own research as always, but in my personal opinion, this is an impressive company, and I'm a fan. I'm a long-term fan of PayPoint. So that's how I feel. Okay, so I'm going to try and keep this to the 45-minute mark for now. But I look forward to seeing you tomorrow at 12:30 in the afternoon. And please hit the like button, because it helps the channel greatly and might mean that you'll see more of me. So please hit the like button, subscribe, and I'll see you tomorrow at 12:30 in the afternoon or in the replay. So thank you very much. Have a great day and good luck.